Hi everyone. I thought I'd do a video for you on the statement of cash flows. And you know, it's even hard if you're an accounting major or an accountant and you're trying to do this. It's just really tough. So the numbers that I have here are different than yours. It's the same problem, but every time you open up Cengage, the numbers will change a little bit, okay, from student to student. So what we have here is, first of all, the transactions, and I think you're probably okay on this. Here we've got cash coming in, cash going out for the purchase of land, and I've got balances here. So there's the balance. Then in this one, oh no, this is a total, I think, 255. Okay, yeah, these were just check totals here, like this. 287,125 is the total assets, and you want to make sure that that's equal to what you have for liabilities and equity. Okay, at 287,125, and then what we do is, what do we pay? We pay rent expense of 6,000, and there's supplies. We buy supplies for 2,500 on account. Then we pay a bunch of bills for 22,800. And etc. Okay, then we've got a total, and my total here was 315,975. That was not like the one that I have in the textbook, so it'll be different. But that's my accounting equation. And once we get this done, then we want to do the income statement first. Okay, so the screen is split. Let's move this a little bit. Here's the income statement. We have revenue 116,875, and that's from up here. Revenue is here someplace. Where is it? 160. There it is. 116,875. And then here are all of our expenses. 29,500 for dry cleaning, wages, rent expense, supplies expense, miscellaneous truck expense, utilities, a lot of different things. Total expenses are 53,100, and there's our net income. Okay. Then so all the income statement will always have on it is revenue minus expenses. Okay, gives you net income. So income net of expenses. That's what it is. Okay, then for the statement of owner's equity, we've got a beginning balance plus additional investments by the owner. Okay, and add net income. Net income 63,775. So right here, take a subtotal and subtract withdrawals, and we've got an ending balancing owner's equity, which we need for the balance sheet. Okay, we're getting there. Here's our balance sheet. So cash, receivable, supplies, and land. There was an adjustment in here for supplies that were used up, and some of it went into expenses. And then on the liability side, just accounts payable. And then the capital account, that 266,775, right from there. Alrighty? Okay, so now let's take a look at that statement of cash flows. It's a really good statement, a really useful statement for investors, because you can adjust income. All right, you can make changes to income, but these are all the payments to cash right here. So you can make changes to income. You can accrue things, different expenses and things like that, but cash is cash. Okay, so a good measure of a company is what is the net cash flow for the year. Okay, what was it? All right, how were they from the beginning of the year? Okay, did they buy a whole bunch of inventory and not sell it? Okay, this is one place where you could see that. So the first line we have for operating activities, this is what's called the direct method, and I think it's easier to read but more difficult to prepare. Okay, so our first line is, how much did customers pay us? Okay, what did they pay us? And the cash received from customers was in number 3, this 32,125 for number 3, and then the 88,000 when they paid on account. Those are both cash payments from customers. So cash received from customers was 120,125. Okay, and then paid cash for operating expenses, and this is the one that's hard, isn't it? So we have 32,125. No, sorry, 6,000 was the first one there, number 4. Let's see. 6,000, was it rent expense? Yeah, 6,000 for rent expense was the first one. Sorry. Then 22,800 was number 6. and the last one is 14,000 is number 9. Let me go back up and see what these are. I hate to slide this around on you. So 22.6, 22.8, 22.6. Must have been 20. No, 22.8 was a payment for accounts payable. So what that really is, the way to think about it, a payment for a payable is a payable would be an expense. So that's how much you paid off for expenses. Okay, and that payment to accounts payable. And here for the last one for 14, these are real expenses that we paid in cash right now. That's number 9. Okay, so my numbers are different from yours, but that's what it is. So when you think about this statement and pull back and look at it, our net income was how much? Net income was $63,775, but our cash flow from operating activities was $77,325. So it was actually much higher, okay? And operating activities are revenues and expenses. Operating means things that we do all the time. Okay, and usually it's adjusted for changes in current assets and current liabilities. But this is what we're in business to do. So from what we're in business to do, we made $77,325 in cash. Okay, and then what did we do with it? We purchased land. Now, anything under investing activities, okay, investing is changes in long-term assets. So typically it's going to be land and buildings. So they purchased land, okay, and that's a cash outflow of $50,000. Okay. And then for financing activities, financing activities are changes in long-term liabilities and changes in equity. So the owner invested another $35,000, and then he withdrew $12,000 for personal use. Okay, so the net cash flow from financing activities was $23,000. Okay, so operating activities encompasses current assets and current liabilities, changes in those accounts. Investing is long-term assets. Financing is long-term investment liabilities and changes in capital accounts. Okay, long-term and equity accounts. So there's our net cash flow from everything. That is 77 minus 50 plus 23, and you add your beginning balance of cash, and this gives you your ending balance in cash. Once this is done, you can do a balance sheet and it all fits in together. So that $95,325 goes here in cash, plus accounts receivable, supplies, and land. That's my total assets, and it should tie out to be exactly what this is here, your total assets. And then your liabilities, we've got accounts payable of $49,200 and the capital account $266,775. Okay. So boy, I hope this helps. I didn't want it to be really long. If don't hesitate to contact me if you're still stuck. It'd be easier if we all had the same numbers, but we don't. Okay. Alrighty. Good luck.